Hey everybody, Courtney Smith here with our Wall Street winners for August the 19th. Just spinning around the world. What can I say? We got to slow it down a little bit. Well, this really slows me down every single week. All right, so very, very interesting price action. I'd been kind of bearish for a while, as you know, and I'm actually starting to get a little bit more bullish. Let me explain. Not 100% bullish, but let me explain what's going on. So first of all, when we look at the chart here, you'll notice that the market came down hard last week, but failed to make a new low. And instead, it shot back up on Friday, and at the same time, the purple predictor broke to a new high, showing that the smart money is using this dip as a buying opportunity. That's a big change. Now, this also changes for the better, but still is not bullish. You can see the little red line is our selling pressure, and it's much higher than the green line, which is buying pressure. Also notice that the Dow Jones actually did break to a lower low. So this chart is not anywhere near as bullish as the last one. Now the Nasdaq also failed to make a new low and also has a pretty good purple predictor here. One of the things to notice is that the volume is declining as we're going through this. I think that's another sign that we're actually putting in a bottom here. Now, this bottom is not going to be an explosive bull market. I'll show you why in a second. But I do think we can rally back up towards the old all-time highs that we made just a month ago. That's all. Now, our seasonality remains neutral. We'd have to get way, way up here before we'd want to turn it to a bull signal. Now, here you can see the market is now in a bullish seasonal period. This is pre-election seasonal patterns. So here's the Nasdaq, very, very bullish. Here's the Dow and the S&P down here. So we should expect a continuation of this rally to continue until mid-September. And then in mid-September, that's when we're going to go move down. So you can see the way we're starting to see these indicators show up is we're starting to see some indicators that could get us to go back up to but not surpass the highs we made about a month ago. Then sell off into September, go back to the lows we just made, if not lower. Now, this indicator, of course, is extremely bearish right now. Look at that. We plunged to new lows on the yield curve. This tells us that we're going to have a major bear market coming up in, I'd say, probably something more like 6 months, maybe first quarter of next year, second quarter of next year. Something like that. So the September dip, I don't think will be the beginning of that big bear market, but it's going to get people very, very nervous. We're then going to rally in the fourth quarter, and then starting in around February, we have to be very nervous of the market. Look at the chart on the left-hand side. You can see now that short-term interest rates are now higher than interest rates out to 20 years now. And we're basically just barely under the 30-year Treasury. This is very, very bearish for the stock market. Very bearish. You know, I always hope I'm wrong. I hope we don't get big bear markets because it really hurts people's pension funds and things like that. But I got to call it the way I see it. All right. We're seeing a lot of money leave the stock market. We got a little bit of a rebound this week, but basically people are saying, I want bonds. I don't want stocks. And if I want stocks, I want really boring stocks. I want stocks that are not risky at all. So get me out of here. The RISKDICATOR is showing a lot of conservatism. Notice that it's as low as it's been in the last year. We haven't seen the RISKDICATOR this low. And it's saying that people are going into boring utility stocks, consumer staples, things like that, safe havens inside the stock market. Global shares actually are doing worse than U.S. shares. Now, bonds, we said money's flowing in here. It is flowing like crazy. Purple predictor is not as bullish as it has been, but it's still a bit on the bull side. And I remain bullish on bonds. So let's take a look right here. What you see is the green line is the actual Treasury yield. And you can see we're now down at the lows that we made in 2016. The blue line are interest rates in Germany. That's the biggest short-term factor that affects the U.S. Treasuries. Then you'll notice the chart itself, the red and black lines, that's the CRB, that's commodity prices. That's also collapsing, suggesting we're going to have lower interest rates. And the only thing that says higher interest rates is the gold line, and that's the price of gold. So still looks like we're going to be seeing higher bond prices and lower yields. That's the way you got to play it. Now, interestingly enough to me is even with the sharply lower interest rates, the dollar is very strong. So the dollar's up because in spite of all the headlines and in spite of even my doom and gloom, and I'm no doom and gloomer, what we're seeing is the U.S. economy is stronger than anybody else's. Even though our interest rates are going down, everybody else's are going down more. So the dollar is, as they say, the least dirty shirt in the laundry. So we're going to put that least dirty shirt back on and buy the dollar. Now, gold, I am quite bullish on gold. Now, I think I think that the easing cycle that we're going into by the Fed is going to cause not only by the Fed, by the People's Bank of China, by the European Central Bank, and by the Bank of Japan. Everybody's starting a new easing cycle, and that's going to bull up gold $100, $200 an ounce, something like that. And then, now, that doesn't mean it's going to go straight up because our indicators are actually all a little weak. Now, fully paid up members, I'm going to show you a chart that'll make your eyes bug out. And if you're not a fully paid up member, you really should, so you can see even the more amazing indicators that I have for fully paid up members. But the point is that we might see a little pause in the gold market here, but that should be a buying opportunity, not something a panic sell by any means. Crude oil, I think, is still going to remain a little bit under pressure. We're going to probably put in a low here pretty soon. The Saudis and the Russians, there's too much production in the world right now, and demand is decreasing. But the Saudis in particular are really making a lot of noises about tightening up their supply and getting a boost to the price, which would get us up to maybe $60. Not going to be a major bull market, but we could see some type of bullishness there. And Bitcoin, we don't have a position here, and we're starting to develop a different pattern here. This is what's called a descending triangle, a flat bottom and descending tops. And it's a bearish formation. Now, we've just had a big bull market. As you know, we made a lot of money, about 300-400%. And this is not usually a topping formation. Usually, but right now it is. It's also confirmed because volume is declining as we go through the formation. And that's a critical part of chart analysis, is understanding the relationship of volume to price. And what we see here is that it is confirming that it is a descending triangle. Now, if it is a top, then we'd want to sell a break of about 91.70. So look at selling 91.70 on a stop order. All right, we've got just 2 more stock financial freedom systems this year, and that'll be the end of it. No more of them, at least in North America. Let's put it this way. We do have our master class for stocks. That's really, we get more and more people every day coming to that. We've only got 1 more option success school in North America and 1 master class. And those are the last classes we're doing in North America. Probably right now, tentatively, maybe forever, but at least until next July. There won't be any in the first half of next year. Also, you got to be getting our bear market course. That's pretty clear. And 7 tactics. This is a fun thing. It's got a lot of cool tactics that nobody ever talks about, and it's only $7. All right. Freebies. Love having you here. Of course, we always want you here. But of course, if you want to be super cool, you really should be a fully paid up members, because that's where the cool kids sit at lunchtime, okay? All right, fully paid up members, hang on. We'll be with you in just a second.